But moving back to the markets in Nigeria, following the approval of the Central Bank of Nigeria for the FMDQ OTC to resuscitate the commercial paper market, the FMDQ is set to quote the first commercial paper on its platform. And joining me to discuss the importance of this development for the fixed income market in Nigeria is Oluwagbemi Leke Sule, a trader at Mansard Investment. Leke, thank you very much. So it sounds like a big deal, but some people are saying not really a big deal, because we know that commercial papers haven't been traded for a while in this market, and I think there's some history there, because it all comes back to the fallout of the banking crisis in Nigeria and the changes that we saw to regulation and how banks should place these assets on their balance sheets or not in the aftermath of that crisis.
Yeah. If we rewind to 2008, 2009, at the height of the financial crisis, when banks used to do CPs without placing on the balance sheet, CBN in 2009 July came out with a circular that all banks must either liquidate all their CPs and BAs or place them on their balance sheet. So that was the automatic death of CPs in Nigeria. But lately, we've been seeing some few corporates, some blue chips who have actually attempted to issue CPs, but that didn't really work. But Stanbic IBTC has been issuing CPs. You know, we as portfolio managers actually see that as a very good one for the market. Right. Currently, the depth of the CP market is very questionable, because first, FMDQ actually came out with a draft guideline just today, and they actually expect market participants to come out before the close of business today on with their recommendations. FMDQ had last week received a no objection letter from CBN, giving them the go-ahead to start quoting CPs. We think this is very good for the industry. You see that fixed deposit rates have been dropping lately. We're seeing across banks, we're seeing 10%, 11, maximum of 11.5.
Right. Is that creating the right environment for CP issuers to come to the market?
Exactly, because instead of placing fixed deposits with banks can now, fund managers can now buy CPs instead of placing directly. So it offers a higher yield than treasury bills, for instance, because with the Stanbic CP, for instance, the last one closed at 11.35, which is a little bit high, about 10 basis points higher than the equivalent OMO treasury bill, because that's actually been the best play you have in the treasury bills market right now. You buy a 120-day, 130-day OMO T-bill at an effective of about 11.25. Then you wait for it for the yields to actually drop in the market, then you can actually sell off. You see that at that end of the curve in the T-bills market, the rates have been high at that level, so that's actually the most attractive level. Right. So issuing CPs of maximum 270 days is very wonderful for the investors to really buy into. Okay. So I think.
All right, let's move back to the OMO market and the dynamics that we're seeing there. We've seen the central bank intervene in that market. Going forward, we're going to see another MPC at this month. What are your broad expectations in terms of their intervention in the OMO market, given the liquidity we're seeing in the market right now?
Yeah, you know, lately for the past 2 months, we've not been seeing market data. I think it's due to the system glitch, but we can estimate to a reasonable extent. CBN came into the market today with about 81 billion in OMO bills, still at 10.8. You see how predictable the market has been. The range of bill was 10.8 to 10.8, so everything is pretty predictable. In the FX market, the market has been quite stable as well. The market opened at 162.4555, closed at 162.3040. Right. So nothing has really changed. So we think next MPC meeting, we don't really see anything particular that CBN may really want to tinker with. So we think liquidity is fair enough. So CBN tries to keep overnight OVV rate at around 11.25, because there is this correlation CBN has always been alluding to between the money market rates and FX rates.
All right, so we really have to wrap it up there. Thank you so much, Leke Sule from Mansard, giving us his thoughts on the Nigerian fixed income market.